Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, July 30th, 2013. Well, a continuation of the trend to the downside with today's trading. Today's candle has made a higher high but a lower low, and in bar chart terms is an outside day, and technically doesn't change that trend that was established for the previous day's trading to the downside, with the candle that made a lower high and a lower low. Today's candle is a doji type candle. That's a candle where we basically have the open and the close in the same area. And it's a candle of indecision, and that's basically because neither the buyers nor the sellers have made any net progress in terms of the area between the open and the close. So a strong battle going on between the buyers and sellers throughout the trading day, with the buyers pushing the market up to a high and then the sellers pushing the market down to a low, and the battle being resolved at the same area that we opened at. So a candle of much indecision in the market, and does raise doubt about not only continuation of the trend to the downside, but also the possibility of a change of trend to the upside. So much indecision, and we do need to wait for resolution of this trending action in that first time frame. If we look at where the candle tested to today, it tested to the top of this highlighted zone around the 133 level, or the 133.05 level, and very strong resistance around that area, just around the top of that zone. We had the market now testing for 4 consecutive trading days and being rejected from there. So it does suggest that there is very, very solid resistance around that area, and that resistance extends up to around that 133.20 level, which will be an important level. If this market is going to trade higher, the market will need to close in a very bullish manner up above the 133.20, but I suggest if we do see a bullish breakout up above that area, we could quickly see the market trading to 134. But let's not preempt the market, because we're not trading up to that area at the moment. There isn't any hint that that will happen at the moment. We have a lot of indecision in the market. By the same token, we do have solid support down below the bottom of this zone around the 132.50 level, and it has been tested for the past consecutive 3 trading days with strong price rejection from there. So that will be a solid area of support for this market, and the zone is extending roughly down to around the 132.33 level. So very, very solid support down below where this market's trading at the moment. In terms of a pattern in this market at the moment, we did have this active symmetrical triangle type pattern develop. The prior trend leading into it, a close up above the upper barrier, and turned out to be a continuation pattern. Our target was the measured move, the distance moving into the pattern projected up from the breakout, in line with this major swing high around the 134.20 level roughly. The market has been trading higher with some very solid bullish candles, the market finding support around the cloud, the Kumo, and now congesting, and it has formed some sort of an inverse triangle or a small megaphone type pattern, and that's where we have the peaks and troughs, or the highs and lows in the pattern, becoming successively higher and lower in the case of the peaks and the troughs that we can see here, or the highs and lows for each candle. This is a difficult pattern to trade. We're looking for a solid bullish or bearish breakout below the barriers. If we do have a bearish breakout down below, we do have very solid support around the Tenkan-sen and the top of the cloud, so the move may not be substantial to the downside, but a move to the upside, and especially a solid bullish close up above the upper barrier, would confirm potential for the market to reach up to around this 134 level. So and that would be pretty much in line with some bullish activity that's required for the breakout up above that important resistance up around the 133.20 level. In terms of the Fibonacci extension, and now that we're in a first time frame downtrend, we're examining the relationship of that first time frame downtrend to the previous time the market was trending down in the first time frame. And here we've seen the market for the second consecutive day testing down to the 50% level and just below, and being rejected from there with an indecisive doji type candle. It does suggest that there is a good possibility of a change of trend. So what we want to see is confirmation of that change of trend, with the market making a higher high and a higher higher low, so that is a possibility. In terms of the Fibonacci retracement, also for the second consecutive day, strong price rejection from the 23.6% level. It's a minor level, not as strong as or as important as the 38.2, the 50 and the 61.8% and the 100%, but still it is significant. And when we have price rejection from there, it does suggest that the sellers are not strong in this market and that there is a possibility of a change of trend. So this is also suggesting that there is a possibility of a breakout to the upside. In terms of Ichimoku, obviously a bullish market in all three time frames. The market's trading up above the cloud, so we have a bullish market in the long-term time frame. The market is trading up above the Kijun-sen, so it's bullish in the medium-term time frame. The price action is a fair way away from the Kijun-sen, and that suggests quite some disequilibrium in that time frame, and that suggests the possibility of the market testing lower and trying to find equilibrium around that Kijun-sen. So we do need to be prepared for a potential breakout to the downside. But in terms of the Tenkan-sen, the green line here, the market is trading above that and suggesting that the market is bullish in the short-term time frame as well. If we look across to the Chiká span, that's above the corresponding price action. So it's confirming the bullishness that we're seeing in all three time frames and suggesting that it's more likely that we would see a breakout to the upside rather than to the downside. Obviously, critical to this is the zone around the 133 level and then the important area around the 133.20 level, but I suggest that if we see bullish activity up above that 133.20 level, we could quickly see this market trading up to the 134 level. If we see the breakout to the downside, very solid support below around the 131.95 level, and the Tenkan-sen may be trading around that level, and then just below there we have the top of the cloud around the 131.80 level. So very, very solid support just below where the market's trading.